think, here or be hearing a lot of the positive things and the convictions on the investment philosophy of the two markets. So we're going to quickly start with a question opening to all of the panelists, given your expertise in private and public investment. So given the current macroeconomic headwinds, and a lot has been happening globally on the geopolitical landscape, etc. So a lot of investors are thinking about their global asset allocation strategy. So in this environment, how are you thinking about your own investment strategy and why China is an attractive market to you? I'll start with Sean.
Yeah, so for Triada Capital, we are a very bottom-up based approach. We're focusing on China. We think China represents a great opportunity set. If you look at China, GDP is around 70% of the USA, but within the index, it's only representing, say, around 3%. And under that, a lot of people are underweight because of the geopolitical situation, et cetera. So like Warren Buffett once said, right, when other people are fearful, we want to be brave, right? We think right now it is a great time to really start investing and collecting a lot of the great company that we think has a very strong competitive edge that can continue to compound through time. So if you look at the valuation right now within the index, a lot of people look from P perspective, it's very cheap. You look from a long run DCF perspective, et cetera. We think now is a great time to look into China.
Great. And Ethan?
Yeah, for RT Capital, we are multi-strategy investment manager. So we invest into special situation. We invest into private equity. We have the EV fund invest into the EV supply chain that we are very bullish. And also we have the special situation fund. And after the collapse of the property market in China, a lot of property developers are in trouble, so we see a lot of good investment opportunities, provide fundings to some projects in the prime location in tier 1 cities, or we provide fundings to specific property developers or companies that we are comfortable. For example, last year we committed $80 million into a very successful Chinese company. The new materials producer, and the company, they are going to have a sizable M&A and needs the funding from us. We have very in-depth analysis in the company and also take the bullish views on the sector they engage in. And we structured the deal that we invest into the convertible bonds that provide 9% per annum, and also plus the upside. And the company performed very well. Indeed, the company is sitting at $300 million cash in the balance sheet. And after the announcement of the transactions, they receive another $130 million from the local government. So a lot of opportunities in China, I think, that, like Sean mentioned, with the tumble or the end of the bear market after 3 years from 2021, now the valuations becomes very attractive, and also with the recent positive measures, supportive measures by the central government, we take a very bullish view and see the market has stable and has very good potential upside.
Certainly very, very convincing live example. So I'll turn to Dr. Cui and come back to Liu in a second. So what's your perspectives on your global strategy and about China?
Thank you for having me here. Just tell you a bit about Gulf Capital. We're incorporated in Abu Dhabi. We created the largest, oldest private equity firm here. We have 300 shareholders who all rallied behind us to create a regional champion from the Gulf for the Gulf. But increasingly, our portfolio companies are growing, and we're pushing our way into Asia. And we are very encouraged by the growth prospects in Asia. We've done 15 acquisitions in Asia. Every time we buy a company in the Gulf, we go to Asia, including China, essentially. And I tell our global investors, if you want growth, you have to be in this corridor from the near to the far east. We're creating this new Silk Road. So we're very encouraged by the growth prospects in China, Hong Kong, and broader Asia. And our hope, we started here and we're going there, but we established an office in Asia. We'd love also to bring Chinese and Asian companies to the Gulf, because they bring great technology, know-how, excellence in manufacturing. So we're trying to see, we know where the growth here is in the Gulf. What are the best companies we can bring from China to the Gulf?
Great. I think very diverse exposure. So Leo, the audience will all be very keen to hear your understanding on the recent series of announcements of the stimulus policies. What's in your view, what's the underlying impact, and will that lead to an economic transformation, and what impact will create to the capital markets that is relevant for all the investors here?
Thank you. Yes, actually last night I wrote down some key points, quite fresh, on the China policy change. Actually, this is not the first time Chinese government make a very strong announcement. It's a set of policy change. The first time back to the end of September. At that time, actually, Chinese government already changed the direction of a set of policy, which include policy towards property market, policy towards the capital market, and policy towards the whole economy growth, especially focus on the consumption. But this time, this meeting, yesterday's meeting, is very important to set a tone for next year's policy, economic policy. I will share some key points with you. Number one, they were to do whatever it takes to fight with the deflation situation. So they will do two things. One is they will adapt loosen monetary policy. Because normally they will use the term prudent monetary policy. But this time, after 2008, the first time Chinese government will adapt loosen monetary policy for next year, or maybe start from here. Yeah, that's a very important change in last nearly 18 years. And the second, they will do a very active fiscal policy. Yeah, that's one thing, to try to give as much liquidity as you can imagine to the market, to the system. That's one very key point. The second one is they speak out very clearly. They try to do two things to stabilize the stock market and the property market, which means to stabilize, in my opinion, is to make it profitable, make it the price rise again. Yeah, that's the second point. The third point is stimulate domestic consumption and will give subsidy to consumers. Actually, this is the first time central government try to stimulate economy not through the capex plan, not through the infrastructure building. This time is the first time to stimulate economy through the domestic consumption and give subsidy to the consumer directly. That's the third point. And the fourth point is try to resolve the local government debt. People all talking about the 10 trillion RMB to buy out the local government debt is not enough. But I believe the direction for the policy is much more important than the amount of the money, because on the way, either they can change the amount of the money, and also, after you deal with some bad assets, the other assets sometimes may turn from the bad assets into good assets after a certain level of the price increase. So that's the 4 points I want to share with you. And also, given the valuation, it's kind of quite easy to find a group of stocks for next 2 to 3 years you can deliver EPS growth around 15 to 20%. So if the valuation doesn't expand, we can get 50% in next 2 to 3 years. But if the valuation expand a little bit, say 20 or 30% from this historical low level, which means we can double our set of selection in next 3 years. So I'm quite positive at this point. And this is happening, it's real direction change.
Great, thank you for giving us a very live and timely read on the latest policies. I think everyone is, particularly outside of the world, are speculating a lot of things, and the implication of those. So this is a very thorough, targeted basket of serious policies, and we start to see more to come next year. So coming back to Sean, so your fund has been generating quite good alpha performance against the benchmark. Can you share with some of the secret sauce in generating alpha? And did you leverage, or are you going to leverage AI in some of your investment process?
Yeah, thanks for the question. So the short answer is there's no secret sauce. We've been very focused. Well, first, very focused on China market, very focused on long run. And I think that's quite key, especially in an emerging market that has a great amount of volatility. I think for us, we continue to try to identify the great company that we think can continue to compound through time. And this, in the long run, will generate really good return in the long run compounding matter. And second is, if you look within China, when we're running due diligence, we believe it's very important to be on the ground. So myself, the investment team, we're in Shenzhen in China, also in Shanghai, and we have back office in Hong Kong. We think being on the ground, be able to channel check with the supplier, the upstream, the downstream, their client, is very important, and be very hands-on on the product. So before, when I was doing a lot of research within the EV segment, I actually bought a bunch of those cars, go around a road trip within China to get a better understanding of the consumer experience. And I think third, for our fund at Triada Capital, we triangulate a lot of alternative data. So that means if you think about China as a whole, right, the digital penetration rate of the mobile phone is more than 70%, right? And if you look at the number of cities within China that has more than 7 million population size, which is similar to Manhattan, in China has 15 cities like that. But even if you visit all 15 cities, it's only 12% of the whole population size. Right, so the question is, how do you run very deep down due diligence? By leveraging alternative data, big data, which is anything digitally, you actually get a tremendous amount of view. Right, so for example, if you look at TikTok, Douyin, which has more than 1 billion MAU, et cetera, if you look at different social element, search trend or GMV trends on the e-commerce site, you actually get very deep down insight into the consumer behavior, get an understanding of the unit economics of various competition, et cetera, et cetera. So that's really how we run our due diligence, get a better insight into a read.
So there's no secret. The secret is be agnostic on the data and the insights from the data, and input some of the strategy that will make the mathematics work. So turning to Dr. Karim, so you mentioned that you've completed 15 buyout transactions to the Far Asia, and how are your portfolio companies right now embracing AI in their business operations, and any advice that you would give from a shareholder perspective to them?
I think you have to embrace AI technology. It will accelerate the growth of our companies. We're using it very judiciously. We've been using AI for 3 years, way before ChatGPT has been launched. I'll give you an example. We're invested in the world's largest revenue cycle management platform. We help hospitals and clinics build insurance companies. We're processing per year 300,000 claims. With the use of AI and software that helps us fill those claims, we're processing now 3 million per year. So it allowed us to increase our productivity by 10x. We have 3,000 coders in Asia helping us process those claims when we're doing 300,000. If I was increasing the number of coders without technology, I'd need 30,000 coders to process the 3 million claims. But by using AI and software, our productivity is exploding without adding headcount. So that opened our eyes, essentially. And this company, we increased profitability by 5x by leveraging technology and AI.
Great. And Gulf Capital is one of the largest PE funds in the region, and you focus a lot on sustainable investments. I think many investors globally have been struggling to find the right balance between sustainability and the ability to generate return. So do you think China can present this unique opportunity where you can find a win-win? I mean, win-win means being to achieve sustainable and fast growth at the same time.
I think you can do good and do well at the same time. We're a big investor in sustainability. Actually, one of our best investments is in water desalination, water treatment. We bought the leader in the Gulf. We took it to India, Indonesia. Then we bought the leader in China. We built 10 big water plants, sewage treatment plants in China. And our profitability increased by 10x. And we're able to sell that business to Fosun and Mitsubishi. And that was a great experiment because you're delivering clean water across emerging markets, but you're also doing great returns. So it shows it's not a charity game. When you're investing in sustainability, you can generate serious returns, especially in China.
Great. You can do good and do well at the same time. So, Ethan, you mentioned that RT Capital is a multi-strategy asset management firm. And also, a couple of you also mentioned that the valuation right now is very cheap and attractive in China. Also, a lot of companies are right now under distressed conditions. So can you share with us a little bit more insights on the credit sectors, the private credit markets, and how are you approaching these investment philosophy in China?
Yeah, sure. For our special situation fund, we partner with one of the largest NPL state-owned manager in China. So we have some unique access to in terms of information, in terms of market access. For example, we could buy some distressed loan from China, from the commercial bank with our unique channel. And I just mentioned the tumble of the property market in China is already very serious. A lot of developers has default and going to taking the lenders, they are taking the legal actions. But in the meantime, it also incurs some very good opportunities because the debt we can acquire at a very, very low, very attractive price. And for our company that we are quite specialized in the restructuring and taking the legal actions. We acquire the loan and we account for a decent amount of the percentage of the loans issued by the companies, and then we can negotiate the company and actually also support the companies to go through the bad time. So if we can buy the loan at a very, very low price, through 1 to 2 years, the company can recover from the cash flow that we already can easily get back the cost that we invest. So in the coming 3-4 years, all the extra cash that we can get back will be the profit. Also, I would like to share there's 3 areas that we see for our special situation investment. We see some good opportunities. First is some very residential project located in Tier 1 city at a very prime location that the developer have lack of capital to develop, that we can support them to further develop and become the equity shareholders into those projects. And second is the distressed loan I just mentioned. And the third is still the structured financing. That's because the asset price has come down by 40-50%. Now the valuation become much more reasonable. If we still put the 50 to 70% LTV, that's the downside is actually very low. The safety net is very high from our perspective, and we can still charge a 10 to 12% interest rate plus the upside. So these are the opportunities very attractive to us.
Great. Credit is definitely a strategy that you can play, particularly in an economy of structural reform or structural changes. So as long as you play it right. And Leo, thank you for your interpretation on the policies. But the sharp question is, how is that going to reflect in your own investment strategies on the sectors picks, on the stock picks? How do you think Green will take and capitalize on the opportunities in the capital markets?
A good question. Thank you. In Greenwoods, we call ourselves a fundamental investor. So we make decisions based on fundamental change. For example, after the end of September, we have already seen some numbers change. The first-tier cities' property transaction volume actually rebound 2 to 3 times year over year, this number. And also we observed the property price stabilized. Actually, last 1 or 2 years, the property selling price dropped from peak around 30%. But now we see the transaction volume rebound and also the selling price stabilized and even a little bit pick up. That's one fundamental. Another thing is we find out it is a very clear trend. Now younger generation spending more on we call experience, self-entertainment consumption, rather than to buy a property, to spend on some long-term investment. They try to entertain themselves, such as buy some small nice goods, spend a lot on the travel and other experience, even to buy a very expensive concert ticket for themselves. So actually, we find out different trends and try to allocate in this different trend to find a specific company. And then another very interesting trend is now we find out less competition between several sectors. So the industry leader now even have better margin compared with 3 years ago.
Great. We talk a lot about the different investment opportunities in different industries and asset classes. I'm going to close this panel with 2 actually rapid fire questions. So I'm going to start with Dr. Karim, and everyone got the same thing. So if you have to name one top investment thesis for next year, what would it be for you? And if you have to predict the capital markets performance in China for next year, what would that number be in your mind?
I think fintech is very exciting for us. We're very invested in this space. We're moving towards the cashless economy here in the Gulf, like it happened in China. And that trend is a mega trend for the next 10 years. And in terms of growth in China, we have spoken about that. And my view, with economic stimulus, will be 35% growth increase in the index next year. And without that, it'll be probably single digit. So.
That was the most optimistic view I've ever heard. We heard different brokers have different ranges, but 35 is definitely something that we will look to anticipate. And Liu, how about you?
I give the number firstly. I think the index had the potential to grow up 20% plus. And 2 areas we think maybe quite a surprise for us. One is maybe Chinese tech company will develop very good model for AI application in 2025. That's a very surprising. We can wait and see. Another trend is, I think next year, maybe Chinese EV will sell to a lot of other countries, and maybe 1 car they sell in other countries equal to 3 or 4 cars sell in China. The profit in terms of, yeah.
So technology and renewable energy, EV cars in that sense, and with the capital markets above 20% growth. So Ethan, what's your guess?
It's very simple, just long China equities, and we see, we echo the view that Leo mentioned. We see 20 to 30% upside. For example, you see the Hang Seng Index is still below 20,000. We think that the peak of, the potential upside will be 20 to 30% next year because the China equities are very underowned by the global investors.
Good. And Sean, with your very deep fundamental analysis.
Yeah, so for us, the main theme for us, we're looking at a lot of AI, consumer-driven theme. We think a lot of that has not priced in. It's probably on the hardware side, but software, especially on the data side, there's a lot of opportunity. That's where we're focusing on. In terms of upside, to be honest, we don't predict the index since we're very bottom-up stock selection. We wouldn't know where the index would go. But for example, if we look at our position, we think the top 5 position within our fund, our target is at least 2x in 3 years.
Great. Well, thank you very much. We're going to end this panel, but I think you all got priceless lessons from our insider investors in China and top ideas and the market prediction for next year. So hope you all get good luck for next year. Thank you.